Ongoing trade negotiations and talks top of mind in America's C-suite. How do we know that? Because at CNBC, we talk to the C-suite executives all across America. Let's get out of Frank Holland with the results from the newest CNBC CFO Council Survey. Frank.
Hey, good morning, Brian. You know, just days before the president tweeted that $200 billion worth of Chinese goods could see their tariffs raised from 10 to 25%, the CFOs in our survey expressed their lowest level of concern over U.S. trade policy since those tariffs on China were put into place last year. In Q2, 40% of all CFOs saw U.S. trade policy having a negative impact on their business. But you have to keep in mind, that's a really sharp decline from Q4 of 2018 and even from just last quarter. In Q2, the CFOs from the U.S., they were slightly less concerned than their international counterparts, only 35% seeing U.S. trade policy as a negative for their business, 45% saying they don't see trade policy having any impact at all, 15% believing it could actually benefit their business. So you could say some rising optimism here in the U.S., but this trade deal is still seen as a variable that has to be accounted for, especially internationally. When asked what is the biggest external risk to your business, well, U.S. trade policy was the top answer for CFOs in Europe, the Middle East, and Africa. It was tied for first for Asian Pacific CFOs. It was tied also with China as one of the listed top answers. Here in the U.S., CFOs only 10% giving that answer. Also, last quarter, no CFO saw China as an external risk. Now, 13% of the global group say they feel that way about the world's second largest economy.